Welcome back, everybody, to Magnolia on Money. This is Ed Cox with your weekly market update. So today we're going to talk about inflation. We're going to talk about CPI and what are the couple of the culprits of what's going on with inflation. So before I do that, let's dig into what's going on in the market returns and what are we seeing. So the S&P 500 last week was down 1.8% roughly, and the bond market was down about 0.4%. Year to date, the S&P 500 is down 7.16% as of last week, Friday. And the bond market's down almost 3.5% year to date. So we're seeing a pullback in the market. But if you go back and look on the year, so if you look at last Friday was when these numbers came out that I'm talking about. A year from last Friday back, we are S&P's up a little over 14%. So all in all, the markets are still doing well. We're still seeing good numbers come in from the economy. So we should still see this rebound from this pullback. So, but let's talk about consumer price index, which is consumer price index, or you see it as CPI, is the average change in prices over time that consumers pay for a basket of goods. So it's a measurement of inflation. It tells us how the price fluctuations in this big basket of goods, what's happening with the price fluctuation there. So last week, the CPI numbers came out at 7.5%, which is a 40-year high. I think December's was right around 7, so inflation's still getting a little bit higher. And once again, last week, we talked about Fed and what they're doing to try to curb this inflation. So if inflation numbers keep getting higher, you're going to see the Fed react accordingly. So what's the main culprit of this? Well, you've probably heard it till you're sick of it, but really you can't discount what supply chain issues, the effects that they've had on inflation. Look at the used car market and then the new car market. So the used car market last year was up 40%. New car market up 12.2%, I think. So when you have a chip shortage, when you have a shortage of goods that are needed to build the cars, you're seeing supplies go down. They're not able to build cars at the pace that they are typically used to. And when you have supplies here and your demand is here, prices are going to rise to your demand. So supply chain issues are a big deal. Those are, when you look at inflation, supply chains can be fixed, and hopefully that's getting worked out. But in addition to that, what we've seen is rising wage growth. So when wages go up, okay, the businesses have to raise prices to meet the wages of the workers. And so when you see wage growth, you can typically look at prices of goods that are coming from those businesses that are seeing the big wage growth. You can see those prices go up. So between supply chains, wage growth, which are one of the two of the big culprits of inflation, that's what's really happening out there. That's what you're seeing, and everybody's aware of it. When you go places, you can see, they're giving bonuses to people to come work. They're got big signs of hourly rates going way up more. Sometimes 50% more than you saw before the pandemic. And the good thing about wage growth is, yes, people are making more money. The problem is it's being taken away from by inflation. The other thing about wage growth is, although supply chain issues can be worked out in the shorter run, wage growth tends to stick. So it's more sticky. So inflation on wages is a little bit harder to deal with. So as this starts to develop, and as we get new numbers in, we'll continue to kind of go back to this and see how it's affecting us. But once again, hope this is helping y'all kind of understand what the economy's doing, what's going on. But we hope to see inflation start to wane here in the first quarter, second quarter of the year. And once again, next month is going to be a good telltale sign to see what is the Fed going to do and how does the market react to what the Fed does. Hope you guys have a great week. God bless. We'll see you next week. Bye-bye.